Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now, today's episode, when it comes to the world of credit and finance, we've all seen the warning signs that, hey, credit cards can lead, to a world of debt and financial ruin, which is absolutely true if used irresponsibly. However, is the opposite actually true as well, that credit cards can be used as a tool to get you out of debt? Well, that's exactly what we're going to take a look at today. So if that sounds interesting to you, then go ahead, press the subscribe button, and let's get to work. Now, first things first, what exactly do we mean here? Well, we're talking about something called a balance transfer. Now, a balance transfer isn't necessarily a specific type of card, though there are cards that are more geared towards balance transfers, and we'll definitely give you some recommendations on the back end of this. But balance transfer, simply put, is a feature of most credit cards that allows you to, transfer a balance, let's say from a Citibank card, $100 from your Citibank card, transfer that balance over to maybe your Bank of America card. So again, I always love when things are called exactly what they are, pretty straightforward. That's a balance transfer. But, why exactly would you want to do this? Because at the end of the day, you still owe the same $100 and it's still on a credit card that doesn't have the best interest rates. Well, balance transfers can be used in a play focused on debt consolidation. So let's say, for example, you have multiple debts. You have a Citi card, you have a Wells Fargo card, maybe you have a personal loan, student loan, what have you. You can have many loans out there paying various amounts of interest rates on the credit cards. It's probably not great interest rate. You want to kind of consolidate them all into one card. And the reason this works, or could work potentially for you, is because when it comes to credit card sign-up bonuses, we're all familiar with the normal one. Spend X amount of dollars in the first few months to get your reward. However, there's usually, on most cards, there's another part of that bonus that says, hey, we'll give you a 0% intro APR for the first 12, 15 months on purchases and balance transfers. And that can make this interesting because now you're talking about a way to consolidate your debt into one spot and potentially take advantage of a 0% intro APR for some amount of time, which in theory is going to give you enough time to just tackle that principal only, not have to worry about the interest or stop paying all these interest payments over here and all your other debts as well. So that's why you'd want to do this. So exactly how does this work now that we know what it is? Well, again, some cards are advertised as, they're low balance transfer cards. You have cards like, the US Bank Platinum card, Bank of America, AmeriCard, but technically you could do this with any card that offers this kind of intro APR. But what's going to happen is you're going to go through the normal credit card application and then you're going to get approved. And once you get approved, you'll have your credit limit. And then from there, you'll be able to say, hey, I want to, transfer over some balances. There should be an option for it. And then a spot where you can actually start entering in this account information, issuer account number, balance, that whole thing. Now, it is based on your credit limit, so you can't transfer over more than you get approved for. You can also do transfers at any other time by calling in or online, however the issuer has it. And in effect, what's going to happen here is that the bank, let's just say you open a Bank of America card, they're going to pay off those debts that you listed, kind of absorb the debt over here. So if you've ever refinanced a house, for example, this is very analogous to that. You have your house, you go in, you're paying, let's say, $100,000 on your house, you go to the lender, I want to refinance. The lender is going to obtain a payoff from, let's say, maybe Citibank is your old mortgage lender. So Chase will give Citibank that $100,000, and now your new loan will be with Chase. It's the exact same thing. Pretty much the exact same thing. So that's kind of how it works. Now, in theory, it makes sense and it sounds really good because we've just consolidated a bunch of debt. We're taking advantage of the 0% offer. But, generally speaking, banks don't do everything just because they're nice, right? There are fees associated with it. So let's take a look at the cost and we'll take a look at the, how and what you can actually transfer over in a balance transfer. So when it comes to cost, the initial transfer is usually going to be 3% to 5% of the total balance. I looked around, there are plenty of 3% cards out there, so I would stick and aim for that 3%. They can also have a minimum fee, right? So, it'll tell you, hey, if you're moving over this much, it'll be 3%, or if you're moving over less than that amount, then they're just going to charge you a minimum fee. Now, most promotional offers charge 3%. Again, you can, if you look hard enough, sometimes you can find lower than 3% or even free, but generally 3% is going to be where you're going to be at. Now, when it comes to what can you transfer over, well, it really depends on whatever the issuer is going to allow. So there's an excellent site, NerdWallet, that they've gone through and they looked at the major issuers and they kind of listed their rules. So really, it's up to them, because credit cards, personal loans, student loans, auto loans, home equity lines of credit. I found an issuer that takes all of them. I think Bank of America was the most generous. Now there are a few notes here though. So you can transfer balances that are not in your name. It doesn't have to be your name on the account. Again, I mentioned the rules vary by issuer. And then you cannot transfer Chase to Chase. And by that I mean that's the same for all issuers. So what do I mean by that? Like if you have a bank of $1,000 on your Bank of America customized cash rewards card, you cannot transfer over if you open like the Premium Elite card, right? Because that doesn't really do anything for Bank of America. That just kind of shifts. That doesn't really get rid of any of their risk actually, and they're better off just leaving it. So it cannot, if you wanted to do that, it would have to be a Bank of America to Citi or Bank of America to Wells Fargo, something like that. That is true in my experience for all issuers. But aside from that, what kind of debt they take is really up to them and differs. But again, I think Bank of America seems to be the most open. So that NerdWallet link will be down below if you want to take a look at it to kind of see what's going on here. So now that we know that, we know how this works, we know why do we want to do it, we know what we can move, let's talk about the initial strategy. How would I actually use this and incorporate it into, my debt consolidation, my comeback from debt, if you will. So the overall strategy is not going to be that bad. I'm highlighting 3 major steps. So first of all, you're going to want to identify a card with intro APR, offer on balance transfers. You're looking for low transfer fee, long period of 0% APR. We'll talk about some examples, and then supports the type of balances that you have to pay off. Once you found that, now you want to get ready to do this, so have your transfer account information ready at application. And the reason you want to do this is because, remember, the clock on intro bonuses starts the day you open the account. Even if the card doesn't show up in the mail, starts the day you open the account. And then number 3 is kind of a follow-up to this. You're going to want to create a budget and action plan and focus on paying off the full balance by the end of the promotional period. And that is key here. Again, this is debt consolidation, takes a bunch of other balances, puts it into one spot. And you're taking advantage of that 0% APR, which is fantastic because then you're just attacking the principal. The thing to be aware of those, you really have to plan on making sure that you've paid that off, by probably a month before the intro APR expires. So let's just say if it's 15 months, by month 14, you want to be done with it. And that's because we all know that credit cards have terrible interest rates, right? So, if you didn't make it through your whole balance transfer amount, then it's all of a sudden it's going to be, jacked up to 20%, 24%, whatever the interest rate is, on this card, and that's probably going to be way worse than whatever it was on these other loans, unless they came from another credit card, I guess. But still, that's why you really want to have a plan of attack. So generally, we suggest something like, hey, we definitely make a budget, make actionable items, cut, expenses that you don't need per se, or pause them. I guess, everyone loves, Netflix and all that, but, can you pause it, really put together an action plan to have that paid off? Because that is the biggest key, to take advantage of that promotional period. So overall, I think we have the point there. So let's close out with some few things to consider, and then we'll talk about some actual cards you might want to look at. So when it comes to things to consider, this is kind of a summary slide, but again, your credit limit. Now, unfortunately, you're not going to know your credit limit until you actually go through the application process and you're approved, but you can't transfer over more than your credit limit is just not going to allow that. The cost of the balance transfer, again, 3% is kind of the sweet spot that I've seen. Types of balances you're paying off, make sure the issuer actually takes them. Who holds the debt is a good one, because sometimes if you're trying to transfer something from a store card, perhaps, that might actually be issued by one of the issuers. I think the example I saw online was, someone trying to pay off their Best Buy card with a Citi balance transfer, but Citi actually at the time was issuing the Best Buy card, so they're not going to take it. So you just got to figure out who actually holds the debt, who's actually issuing it. Another one here that doesn't get talked about a lot, but who's responsible for sending the payment? Most often the issuer will send the funds, but sometimes you could receive a check to deliver yourself, which is weird. But if you've ever done a cash out refinance on your mortgage to pay off a bunch of different debts, sometimes the issuer will do it for larger banks, but other times if it's smaller places, the issuer is going to send you checks and you have to deliver them. That's usually not common here with balance transfers, but again, just make sure that you know who's responsible for it. So with that, let's close out with some few recommendation cards. Now, again, this is all kind of at the time of taping, but there are two types of cards. There's the regular cards that earn multipliers that we all love, Freedom Flex, Custom Cash, that whole thing. And like I said, those will have 0% intro APR offers along with their bonuses. And they come with multipliers, which is also great, making them not a bad option because you can still get a cashback sign-up bonus, you can still get multipliers, and that 0%. However, these cards usually come with less of a runway to do your 0% APR offer, like maybe 12, 15 months max, something like that. Then you have cards that usually come with no rewards and no real sign-up bonus that we would normally consider, but they have the longest runway for that 0% APR. So when we talk about this, we're talking about things like the Wells Fargo Reflect card has about 21 months right now. U.S. Bank Platinum card is 20 months. Bank of America card is a good one as well. So, don't plan on, getting reward points, unfortunately, here. But that's not really the point. None of those cards, by the way, will give you points on a balance transfer. So there's that as well. But, again, there's two different goals. Not everything is focused on points alone. Debt consolidation, getting back on track is, definitely better. Now, overall, you can also consider, taking out personal loans to consolidate debt as well. Personal loans are absolutely going to come with an interest rate. And again, it's still like unsecured debt for the most part when it comes to personal loans. So again, they're going to be a little bit higher. Of course, you have cash out refinances on your mortgage and things like that, but all that stuff comes with interest rates. And if you're able to do this, that Wells Fargo Reflect, for example, 21 months with no interest, consolidate your debts and really set up an action plan to attack it over, it's almost 2 years. That's going to be the better option for most people, again, because you don't have that interest rate as opposed to, personal loan or other debt consolidation, things like that. So to wrap this one up, balance transfers, these low APR cards, they often get overlooked because most people are here, focusing on, maximum rewards, and I totally get it. But this is another tool to kind of keep in your tool belt if you need it. And there's also other applications here too. If you were just going to make a large purchase and, something you needed, I don't know, maybe your AC broke, whatever it is, something important in your house, you just need a little bit extra time to pay it off. These can actually also help in that regard too, from the 0% on purchases for X amount of time as well. So, overall, like I said, just keep this as a tool in the back of your head or up here in case you need it, and you can definitely take advantage. But anyways, guys, if you like this one, drop me a thumbs up down below if you found it particularly interesting. Consider subscribing to the channel. Again, posting content just like this every Monday, Wednesday, and Friday. Of course, right back here every Sunday with all the news you can use in the week that wasn't credit and finance. My question for you guys is to let me know down below what you think about balance transfer cards. Have you used them before? Is this a viable strategy, or what's been your best card that you've used for the strategy? I'd love to hear your thoughts on that. But anyways, guys, that's going to do it for this one. As always, thank you so much for watching, and I'll talk to you in the next one.